There has been a lot of talk about AMD more recently, whether it's on Financial YouTube or on X. And the main focus that I've seen is just a focus on the stock price, right? Oh, the stock was once at $200 or close to it. Now it's at $124. It was once up 40% year to date. Now it's down 15.47%. So it has to go up, right? It has to go up because, well, that's what we think. Well, actually, no, there is a reason why we've seen an underperformance despite the pricing metrics being quite low, despite the growth rates being quite high as well, and despite it being, well, a small company compared to Nvidia. If we think that AMD is the number 2 in the space, being at a market cap of $202 billion compared to the $3.3 trillion of Nvidia, okay, we could see some upside. But then again, there is a reason why Nvidia is the number 1 at over $3 trillion in market cap and why AMD still sits at $202 billion. There's also a reason why it is 2 times bigger than Intel, but that was explained in another video. So in this video, I don't want to focus just on the stock price, so the underperformance of the stock, the growth rates, the average analyst price target. No, I want to focus on a core issue at AMD. And if you've been following this space, you probably already know what I'm going to talk about. So if you're interested in that, hit all the buttons, like, subscribe, all of that. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So currently, the average analyst price target still sits 47% higher than the price we're at right now. Then if we compare AMD to Nvidia, forward PE, price earnings to growth, price to free cash flow, price to sales, and EV to EBITDA, we can see the following. We can see that from a forward PE perspective, Nvidia is more expensive. Price earnings to growth, Nvidia is more expensive as well, but both of them are currently sitting under 1. So, I mean, that's still cheap. That's actually quite crazy to think that Nvidia has a price earnings to growth ratio of just 0.93. Price to free cash flow, AMD is more expensive because, well, free cash flow was very, very low with the latest acquisitions and all of that. Price to sales, Nvidia extremely high at 19.3 times. AMD sits at 6.6 times. EV to EBITDA is a bit closer. Nvidia sits at 29.5 times, while AMD sits at 24.5 times. Now, just focusing on AMD, comparing to the 5-year mean, we can see that for PE, EV to EBITDA, price to sales is below the 5-year mean. Price to free cash flow is a bit higher. That's in the last 12 months. In the next 12 months, that should be much better. So, okay, if we want to stop here and this is our conclusion and say, okay, look at this, 5-year mean is higher than what we are today, blah, blah, blah. The growth rates are still quite good. AMD, the number 2, expected to grow quite fast in the next coming years. Okay, the stock is down this year. It's a buy. That's it. We don't want to know the reason behind it. Well, okay, maybe it might work out. But it's always good to know the other side. And the other side has to do with the fact that despite making hardware, in this case, the hardware is one part of the thesis, but what has made Nvidia so big and powerful is the software side of things. Before talking about that, there was an announcement yesterday by XAI. So they announced their Series C of $6 billion to accelerate their progress. One of their investors was AMD, also Nvidia. We know that Nvidia is the one that is delivering all of the chips, if not most of the chips, to XAI. Maybe that might change now that AMD is invested, remains to be seen. But I want to touch on this part. This was announced, well, this was during the presentation of Steve Jobs, what was it, close to 20 years ago? People who are really serious about software should make their own hardware. In this case, we have AMD that has been making hardware, and the focus on software has not always been that big. And why is that important? Well, if you want to compete in the semiconductor space, it's not only a good thing to focus on the hardware part. No, you have to focus on the software, which is why CUDA has been, well, the top one for many, many years. You've got CUDA for NVIDIA and you've got ROCm for AMD. Why am I talking about this? Well, because there has been some chatter more recently. There is also a response by Lisa Su. So I want to touch on a couple of tweets here. If AMD could write drivers and compilers, they would also be worth $3 trillion. In a competitive market, compilers and drivers are key differentiators. Even if two CPUs, or in this case GPUs, have similar hardware specs, well-optimized software can make a huge difference in real-world performance. And that's exactly what we've seen when comparing AMD to NVIDIA hardware. Writing a really good compiler driver for AMD and then only once it really works, building your own chip around it is probably the best way for a startup to compete with NVIDIA, which is exactly what this quote here is saying. People who are really serious about software should be making their own hardware. So yeah, you start with the software in this case, and then you start making the hardware, and that's how you compete with the likes of NVIDIA, with the likes of AMD. We've seen a couple of small companies actually starting to compete with the bigger ones. For example, Jim Keller with TensorTorrent, and also George Hotz. You might have known him from Comma AI, the full self-driving solution, hardware, software. Now he's actually working on TinyGrad. So he said the following, and this was a tweet from, I think, a month or two ago. He basically compared AMD's performance as a stock and NVIDIA. So two companies with similar hardware, one company has good software, the other doesn't. He talks here about TinyGrad that got AMD on MLPerf with their own stable runtime and driver as promised 18 months ago. And they don't care until the culture changes, sell. So MLPerf is a benchmark suite that is used to evaluate training and inference performance of on-premises and cloud platforms. MLPerf is intended as an independent, objective performance yardstick for software frameworks, hardware platform, and cloud platform for machine learning. There was a whole conversation about AMD and software and the fact that their software basically suck compared to that of NVIDIA, and that's why NVIDIA is basically sitting quite comfortably at the number one, while AMD, they make quite good hardware, but their focus on software is lackluster. Now, there was another interesting thing that happened. So you've got here Dylan here. Dylan is an analyst in the semiconductor space. They did a great report. I wrote a whole thing. I'll try and link it down in the pinned comment or in the description. So he said also the following. Met with Lisa Su today for 1.5 hours as we went through everything. She acknowledged the gaps in AMD software stack. She took our specific recommendations seriously. She asked her team and us a lot of questions. Many changes are in flight already. Excited to see improvements coming. To which Lisa Su responded, thanks Dylan for the constructive conversation today. Feedback is a gift even when it's critical. We have put a ton of work into customer and workload optimization, but there is lots more we can do to enable the broad ecosystem. I appreciate all the feedback and desire to engage with AMD. We are committed to building a world-class open software stack. Lots planned for 2025. Happy holidays to all. Now, like I said, Dylan and his team wrote a whole report. If you want the main highlights, these are basically it. NVIDIA's H100 and H200 offer superior performance and usability right out of the box compared to AMD's MI300X, which requires significant effort for optimal use due to software stability issues. Public releases of AMD PyTorch are often broken, requiring workarounds. Without AMD's engineering support, users face substantial challenges in achieving performance. The MI300X does not deliver on its marketed performance specs, especially in training scenarios where it lags significantly behind NVIDIA's H100 and H200, whose performance is closer to their advertised metric. You might say, yeah, but that's because AMD is more focused on inference rather than training. Okay, an excuse. Although the MI300X has a lower total cost of ownership, its training performance per TCO is lower than NVIDIA's unless using custom non-public AMD software builds. The MI300X training capabilities are limited by its less integrated ROCm compute communication library and AMD's weaker integration with networking hardware compared to NVIDIA's solution, which include robust integration with InfiniBand and Spectrum-X network fabric. The last thing here, AMD's AI libraries are forks of NVIDIA's, leading to compatibility and performance issues. AMD focuses more on inference rather than providing adaptable solutions for training workloads, further hampering MI300X performance in training scenarios. Of course, you might say, okay, but we're talking here about MI300X. Maybe the future generations are going to be much better. Again, it's not here about the hardware. The problem here is on the software side of things. And this might also explain this thing right here. This might explain why, despite being the number 2, they are so far behind NVIDIA when it comes to data center revenue, right? You would think a number 2 would be closer to what, 80, 60 billion dollars? But no, AMD sits at $11 billion, while NVIDIA sits at over $98 billion. You might also say, okay, but NVIDIA had the first mover advantage. That's fine. But the first mover advantage was here. Then what happened here and what happened here? We expect it to continue to go up. Yes, it's true that maybe a couple of years from now, the gap will be a little bit smaller. NVIDIA might lose a little bit of market share. The market might also be a little bit bigger. But that's the thing here with AMD. Why has it underperformed? Well, maybe because the market was just expecting more from AMD. That we've also heard some rumors from Amazon that are saying that, look, there is just no demand for NVIDIA chips. Then someone from AMD said that that's not really true. But again, if your software is not that great, then why would anyone switch from NVIDIA CUDA to AMD? Why would they go from one hardware and software stack that works perfectly, close to perfection, even though it's way more expensive, to something that's maybe less expensive, but doesn't work as well, right? If AMD can figure it out, can manage to actually put out great software, then I think that's going to be a game changer. Again, I don't think it's a smart idea to disregard Lisa Su, but 2025 will be a year where they have to prove themselves. And remember, Lisa Su said the following: data center and AI accelerators will go from $45 billion in 2023 to $500 billion in 2028. And I believe the previous number that she gave was $450 billion. So how do you get there? Well, in 2023, it was 74% GPU, 20% CPU, and then 6% XPU and cloud AI. The projected number for 2028 could be the following: 60% GPU, XPU and cloud AI 28%, and then CPU just at 12%. If you look at the GPU market share, the estimated one, NVIDIA a little bit down to where they are right now, still sitting at 86%. You've got AMD at 10%, Intel 3 to 4%, and then the rest goes to the other small players. You've got the XPU cloud AI market, significant growth from $10-12 billion currently to $135.8 billion by 2028. Big winners here being Broadcom, even Marvell. And then the CPU market is expected to, slow down. So 12% CAGR, primarily for supporting AI chips dominated by Intel, AMD, and ARM. And so what do you get without the networking side? Well, what you get is a GPU market of $291 billion. So if you take 86% of that, that's $250.2 billion for NVIDIA, $29.1 billion for AMD, $8 to $11 billion for Intel, and then $135.8 billion for XPU and cloud AI. This means a more than 2x increase for NVIDIA here for data center revenue, and close to 3x increase for AMD, if of course these numbers are real and they achieve all of those growth rates. And that's the thing when talking about chip making companies. We've been talking about Intel, of course. I own Intel. It's been quite horrible, to be honest. But that's the thing. Intel looked cheap before. Oh, the chart said it had to go up. But essentially what we're talking here about is companies that should be making great products, hardware and software. That's the only thing they have to focus on. Because when you focus on making the best products, the best hardware, the best software, these things will sell themselves. Because in this market, the market doesn't want NVIDIA to own 90% of the market. The market is looking for other players, but the other players have to make great products, hardware and software. AMD is already doing okay, should be doing much better, and that's also the question for 2025, right? How much more growth are we going to see in 2025? Are we going to reach $10 billion in revenue for AI revenue? Is it going to be more? Are they going to start the year with the bar set quite low? Yes or no? Those are the questions that the market is currently asking themselves. Now, and this is also why we've seen the stock underperforming. Now, yes, it's true that the stock is now rebounding a little bit on the weekly here. It's also going to be quite a slow week with the holidays. So don't expect that much volume, but it's quite positive to already see a green candle here. Maybe 120 was the bottom. But to only focus on drawing lines here, left, right, and center, and say, oh, the stock was down, so it has to go up, does not make much sense. We're talking here about semiconductors, we're talking here about chips, AI. There's always a reason behind it. And I highly suggest to do more research when it comes to CUDA, ROCm, the software side of things, and how important these things are. This is basically it. This is what you needed to know. If you have something else to say, let me know down in the comment section below. Like, subscribe, all of that, and I'll see you all in the next one. Bye bye.